This JTS Mortgage Minute is brought to you by JTS Company Mortgage Professionals.
Good morning. I'm Jeff Farnham. Springtime will be here before we know it, and that's a busy time for buying homes. Now is the time to start looking at your credit and getting ready. It may take a few months to get your credit report and scores where they need to be to qualify for the right program to buy the home of your dreams. You might ask, why is a credit score so important? Your credit history helps determine the loans you will qualify for and the interest rates you will pay. We get your credit history by obtaining your credit report and credit score. Avoid things like missing a payment, opening too many credit cards or accounts at one time, using too much of your available credit, co-signing a loan, or closing old credit accounts. Your payment history is one of the most important factors in determining your credit score. What you may not realize is that even a single missed payment could spell trouble for an otherwise decent credit score. If you accidentally neglect to make a payment but have an otherwise solid history, contact your lender and request to have your mistake wiped from your record. As long as you're a good customer and it's your first major blunder, your lender will likely comply. Whenever you apply for a credit line, you'll be subject to a credit inquiry. Having too many credit inquiries can not only hurt your credit score, it can also give us the potentially false impression that you're borrowing more than you should be. A better way would be to open new accounts slowly over time so that your credit report isn't flooded with inquiries. Maxing out your credit limit isn't just bad for your finances, it can also damage your credit score. One thing we look at when determining your credit worthiness is your credit utilization ratio, which represents the percentage of available credit you're using at any given point in time. If your credit utilization ratio climbs above 30%, it can really raise a red flag, even if you ultimately manage to make all your payments on time. Co-signing a loan for another borrower won't necessarily damage your credit, but if that borrower stops making payments on the loan, your score could be headed for trouble. When you co-sign a loan, you take partial responsibility for adhering to its payment terms. If the primary borrower falls behind, your credit might suffer, so be very careful about whose loan you co-sign and make sure that person has the means to keep up with the associated payments. Closing an old credit card can hurt your score in more ways than one. If you have an older account in good standing, it can positively impact your credit score, boosting your overall score. If you have an older credit card with a more generous credit limit, it can help your credit utilization ratio to a minimum. If you don't have a pressing reason to cancel an account, retaining it could help preserve your credit score as well. Avoiding these critical mistakes can help you protect the credit score you already have or help you increase your scores to give you more purchasing power. We can help you prepare for the springtime buying season by showing you how to order a free credit report and give you advice on how to dispute claims or connect you with a reputable credit repair company. We want to help you finance the home of your dreams. So let's talk about how strong your purchasing power is today. Get prepared. Call JTS Company Mortgage Professionals today. Thank you for joining me today. Be sure to tune in next week.
This JTS Mortgage Minute is brought to you by JTS Company Mortgage Professionals.